Hey there, my name is Mariusz Konieczny. This is a official channel for my website, Classic Value Investors. And I'm very excited I just completed an interview with Calvin, and we were talking about oil tankers. If you've been following my website or Calvin, you know that the oil tankers have been extremely volatile over the last few weeks. So I thought that I would bring him on and talk about it. If you have a Twitter account, Calvin is a fantastic guy to follow. He has 6,000 followers, and he always has fantastic information about the oil tankers, oil markets. Now, as far as me, check out my website, Classic Value Investors. If you want to hear more of interviews like this, I hate to say that because every time you listen to videos, everyone wants to subscribe. But really, if you want to know about other interviews that I do, either with CEOs or other investors, just subscribe so you'll get some notifications. Also, go to my website, classicvalueinvestors.com, and I have instructional videos for free that you can watch and educate yourself. If you want to read some of my books, recently I have How to Profit from the Coronavirus Recession, and in that book I have 50 different ideas. Oil tankers are included in it, so check it out. Let me know what you think. And now I don't want to waste any more of your time. Let's hear the interview with Calvin. Welcome to Classic Value Investors. My name is Mariusz Konieczny. Today we're talking about oil tankers with Calvin Froedge. Calvin, thanks a lot for joining me.
Yeah, thank you for having me.
Yeah, so I've been following you on Twitter for quite some time. Obviously, you know the sector quite well. You definitely did your homework, and what was it, yesterday or a couple of days ago? You really surprised me a bit because you sent a couple letters to I believe it was Euronav and Scorpio about some of the suggestions that you have, maybe dissatisfaction with their companies. Can you talk a little bit about what kind of letters you sent to them and why you did that?
Well, I definitely wouldn't say it's dissatisfaction with the companies. There are some things that are dissatisfying, but I think the performance of the companies has actually been excellent. Essentially, I was just telling them that the valuations don't make sense. You're obviously performing very well. At least in Euronav's case, you need to maybe think about changing your policies because apparently investors don't care about these gigantic dividends. Apparently getting 25% in a quarter just isn't 25% over 2 quarters in dividend payments just isn't very interesting anymore. So that my thinking was just that it's crazy that you can announce such good earnings. Literally 3 of the best quarters in a row that a lot of these tanker companies have ever had, and shares sell off so violently. And apparently I wasn't the only one that sent letters like that. I spoke with several other people who had also written to investor relations, and then I don't know if you saw the note from Amit Matora, the Deutsche Bank analyst, I think that's his name, where he said, Euronav should probably just think about going private because, since IPOing and having the NYSE listing, you guys have basically gotten no credit at all for a masterful performance in asset allocation. Your valuation makes no sense. So I think a lot of people right now are just kind of frustrated with the market. It seems kind of like a casino instead of something driven by rational valuations. And so that's really kind of what motivated my Euronav letter, especially because Euronav has been my most bullish position for a good 9 months now. I've encouraged family members to buy Euronav stock, close friends. I mean, it really is a conviction buy. I think that they're one of the best managed companies in the entire energy space. And they're with their balance sheet, the age of their fleet, they've got very little risk, right? I mean, if even if the market was bad in the future, it's not like you have to operate at a loss. You've got crewing costs, but you can definitely cut operating expenses if things were bad in the future, and they've got a gigantic cash buffer at this point. I mean, I don't think people really can't even conceptualize how much money these companies have made relative to their market caps, and how rare to see that, how rare it is to see that in any sector.
Right.
To speak on Scorpio for a moment.
Let me just stop you for a second. If I can ask you a question about
Yeah.
Euronav. So you pretty much in your letter said, yes, we like the fact that you're paying dividends, but because on dividends we have to pay taxes, and especially the tax withholding when it comes to the country that Euronav is incorporated in, and you said, could you consider, instead of maybe dividends, do buybacks?
Yeah, well,
Did you
so
get any feedback from them after you sent the letter?
I haven't yet, but they generally respond within a few days. And they have commented that on these issues many times. Their AGM is on the 20th, so I'm not sure if they're going to comment or not. But they have approved a 10% buyback. They tried to do a 20% buyback, and apparently shareholders voted it down. So another big thing to think about is that a lot. This is part of what Robert Bugbee was telling me when I spoke with him, that the institutional shareholders, they really don't trade their positions very much.
Mm-hmm.
Sorry, just a second. I've got another call coming in. Let me just cancel that. Okay, sorry about that.
No, no
So
problem.
when I spoke with Bugbee, he said, look, institutional shareholders have very different priorities and very different trading needs, or investment needs than retail shareholders do. If you're an institution, you're not going to be trading in and out of your position every week like a lot of the retail guys do, and so that's the much larger part of our shareholder base. So and I think with Euronav it's probably the same case. The institutional shareholders, maybe they just want dividends. Maybe that's why a larger buyback, because the management suggested a 20% buyback, and that got voted down. And on the 20th, there's a vote on a 10% buyback for the court. I'm not sure if that's for the quarter, but then they'd already approved a previous buyback. So
But also,
I think part of the problem here is that maybe institutional holders have different priorities than a lot of the retail traders.
right. But also now that the stock price is lower, maybe they will have a different opinion as to. So we just have to see when they have their AGM. Okay, so
Yeah,
that
it's
yeah
trading below NAVs.
yeah. Okay, so that's Euronav. Now let's talk about Scorpio, because that was a little bit more interesting uh,
Yeah.
letter, because we're talking about how you were asking the CEO to restore confidence, and there was a little bit of um, saying, hey, part of the lost confidence is because of your actions. So can you comment on that a little bit?
Yeah, so anybody that's followed Scorpio for a while, knows that Bugbee has done some trading in and out of his position, and so I think that's good and bad, right? Everybody goes crazy when he buys calls, but then I think everybody goes even more crazy when he sells calls. So Robert Bugbee assured to me that he would not be buying and selling calls anymore. He, he said he had no he basically had no idea that it would be perceived as a a take on the company for him selling shares when tensions in the Middle East were changing. I mean, the guy's a trader. He's been trading his whole life, and that's just kind of part of his DNA. But anyway, he assured me that that is something that he would not be engaging in anymore. And then yesterday afternoon, I'm sure you saw the CEO's company, which is a related party, with the largest shareholder being the mother of the CEO, Emmanuel Loro. They purchased around $2 million worth of common stock in the open market. So I do think that they have confidence in their company, and Bugbee definitely has a track record. The management team definitely has a track record of playing the cycle correctly. When OMI was sold, it was trading way above NAV, and it was sold at the top of the market, and Torm and TK basically got left holding the bag. Right, this is a decade ago, but he's managed to play the cycle pretty well. I brought up other things as well, because it's people say a lot of things about shipholder management. They say a lot of things about shipping companies, and I'm not sure all those things are deserved. They say destroyers of capital. They say that they can't be trusted, and in some cases that might be true. Like if you take a top ships, for example, or dry ships, that's absolutely true, right? Have definitely been unscrupulous players that have just continually diluted and have never built any kind of value for shareholders. Like shareholders have always just been in this kind of bag that they could pull money out of when they needed it. I do think that Scorpio insiders have a vested interest in the company, and if you look at some of the older comments back in the OMI days made by Bugbee after they sold, I think that his interest is in being respected by his peers and running a great shipping company. So there might be some strange things that happen with Scorpio as far as related party transactions and that sort of thing. But Bugbee's stance is basically that those things are that the way that things are structured are to make things easier for them to operate, and he is interested in greater transparency and basically justifying why things are structured the way that they are. So we'll see what happens. I still have a very big position in Scorpio. I'm aware of what the risks are. I'm aware that it is a much riskier bet than somebody like Euronav. But I think that unless the market was very bad for several years, Scorpio is not going to have any trouble making its way through. And I think that that Scorpio management really knows the business. They've got a lot of advantages from having a very large fleet, from having a huge part of the sectors that they operate in, LR1, LR2, MR. They've got a lot of leverage. They run their own pool, so they've got a lot of advantages, and it is a riskier bet. But right now, it's with them trading at half of NAV, it's still a bet that I'm willing to make.
Right. Did you? I know in your letter you pointed out buybacks. Did you talk about buybacks at all with him on the call?
Yeah. So I don't think that buybacks are something that they are going to do in the immediate future. I think that the first thing they're going to do is pay back their baby bond. Okay. They're going to. I think you're going to see meaningful debt reductions by Q2. I think that he is very focused on making sure that if there is a storm ahead, that they're going to be able to weather it. He wants to have cash. He wants to pay down debt, and I think that's what they're focused on right now. And I think you will see a meaningful debt reduction in Q2 results. If you don't see a meaningful debt reduction in Q2 results, I will probably be selling my shares.
Okay. Now, what do you mean by meaningful? Is there a particular range that he mentioned or that you're envisioning?
Well, just if you look at their if you look at their 2020 maturities, then you'll see what's on the books. Um, I think it's a few hundred million for this year, maybe 250. I'm not I don't know the exact numbers off the top of my head, somewhere in
Okay.
that range. But if they between cash and receivables, they should have enough now to pay off the majority of that. And based on what I think they'll make in Q2, I think they'll have also a really good start on next year's maturities, and they'll have a great cash cushion. So I don't think that you can really overstate how much cash Scorpio is going to make in Q2.
Okay.
If somebody told me, back in December that LR2 rates were going to be 150K for a month, okay,
Hmm.
then I would have been like, holy crap, Scorpio is going to be trading at $50, right?
Yeah.
Um, I mean, it's an astonishing amount of money. He said several times we could let you could have this ship do one voyage, you could lay it up, and you'd still show a profit on the year. You know, it's an astonishing amount of money for the amount of time.
Yeah.
So it's gonna go a long way in giving them a cash cushion and paying off debt. I was much more worried about Scorpio in February and March than I am now, because what they've made since basically LR2 rates, MR rates, all the product tanker rates kind of bottomed, and then they just started ticking up every day for months, and then all of a sudden LR2s are I think they at one point they hit like 180,000. I mean that's just an insane amount of money.
Yeah. In your, I don't know if it was in your letter or in your interview that it was posted yesterday, you said something about how Scorpio pretty much kind of cornered the product tanker market. Can you elaborate a little bit on that? What do you mean by this?
Well, if you look at how big the product tanker fleet is, and you look at how big their fleet is, a lot of the ships that are out there, product tanker ships, you've got some older fleets, middle-aged fleets, and those guys, if there is an extended down cycle, they're a product tanker basically doesn't trade very well at all after it's 15 years old. So if you've got a middle-aged to older fleet, and you're looking at possibly a couple bad years, it's kind of a tough proposition. Whereas Scorpio, they've got a practically new fleet, and so if there is a a bad cycle, and that there's global calamity, banks aren't lending, they could be one of the only people that survive. So right now, if there's a severe shortage of product tankers, and you're somebody like Scorpio and you run your own pool, and you see what is being booked, and you see what's available, and you've got the biggest fleet in the world, then you have a little bit of leverage to ask for more and hold out. So that's what I meant by cornered, is basically their current position of being the world's largest product tanker operator, and then the outlook of you got a lot of ships that are going to be older than 15 years in a few years, and all of Scorpio's ships are basically new. So that dominant position in the product tanker market is only going to become more dominant.
Yeah.
That
Okay.
those are essentially my thoughts around Scorpio.
Oh, okay. I see. One other thing that you suggested to him through your letter, and you pointed out NAT, how NAT is educating its investor base, and you suggested, hey, maybe Scorpio could have more updates, press releases, maybe some
I
educational
talked with him.
materials. Go ahead.
I talked about that quite a bit. And I think he definitely is interested in educating the shareholder base more. I mean, the guy is really a shipping nerd. He loves the business. Okay, like he's very, very passionate about shipping and maritime history and the cycles. I mean, the guy he loves it. I really think that. Like, if you look at some of his old interviews, then you'll kind of see some of his history and some of the calls that he's made. But I was like, well, look, for example, we talked about jet fuel, and he's like, well, we never really transported much jet fuel, and then now that jet fuel demand is down so much, all of a sudden we're storing a bunch of jet fuel. So to have a shortage in gasoline and a glut in diesel and jet fuel, that's creating some opportunities for us that weren't there before. And I was like, well, maybe it would be a good idea to in your presentations and press releases, maybe spend a little bit of time on educating the shareholder base on exactly what you guys do and what you guys what fuels you transport. Because I mean, if you look at a chart of WTI futures and you look at Scorpio's share price, they almost trade inverse to each other, right? So it's almost like there's somebody out there that's trading Scorpio against the price of oil. And Scorpio doesn't transport crude oil. Like there has been, I think, so much confusion in the market from people that just don't understand the subtle differences between these companies and what they do and what their debt profile looks like and what their management quality looks like, what their margins are, whether they're on spot, whether they're on time charter. If you're just like, oh, Scorpio's an oil tanker, that's not a deep enough understanding. And maybe it's not possible to make people want to be educated. You can the whole bring a horse to water, can't make it drink. But I think he certainly sounded very interested in promoting people to, basically trying to get people to take more of an interest in shipping as a trade and learn about, what it is that they actually do. I think that's probably a frustration in general in the shipping community, and I'm not part of the shipping community. I'm an outsider. I got into this as an investor, but I'm kind of a nerd, and I like learning about complicated stuff. And shipping's pretty exciting because it's got all these geopolitical factors, macroeconomic factors. So for me, it was really, really fun to learn about all this stuff. And I think that a guy like Bugby, he also finds it really interesting and really fun, and he would love to help his shareholder base take more of an interest in shipping and all the factors and the macroeconomic stuff. So
Yeah, I think that the education is something that would benefit the industry, because I heard one of the CEOs talking about, maybe it was Frontline, oh, this is a simple business. And from my perspective, okay, maybe it's a simple business, but you know what? I've studied this for so many hours, for so many weeks, and I feel like I still don't know anything because there's so many moving parts. And so, like, even reading your stuff, talking to you, I think it's part of the whole process. And if the CEOs take part in educating the investor public, that would be great. I mean, I personally contacted Euronav and Scorpio, and I wanted to see if I can do an interview with them, and I didn't even get a response. So, Robert, if you're listening, you know, why can't we do an interview, or any other CEOs? Let's do an interview. Educate the public about what this industry is about, because it is complicated. Maybe to you guys it's not, but to everyone else it is. It is. I want to pull my hair out sometimes trying to understand what's going on.
Yeah, well, it's definitely a constant adventure.
For sure. Okay, so we talked about Euronav, we talked about Scorpio. Now let's talk about a little bit about, the bear case, because it seems to me like when I'm reading about what these bears are saying, a lot of times it seems like they think that bulls or all of us, we're just a bunch of idiots and we don't know what's going on. We think that the rates are high, they're going to stay high forever, and that's why we're investing in it. But that's totally not the case. So like why is it that you're invested in it even though you know that the rates are not going to stay high at these ridiculous levels?
Yeah, I think that actually my expectations are a lot more conservative than a lot of people that are in this trade. For me, it was kind of like, well, look, you've got a lot of downside protection here just because the valuations are already so low. And when you compare the valuations with the level of cash flows that they've been kicking off for the past 9 months, it's hard to understand the valuations. So I just think there's a big disconnect between valuations and cash flows and cash on the balance sheet. So I never thought that you'd see 400K VLCC rates, and I never thought you'd see 200K LR rates. For me, if they're doing double break even, then they're having a great year, and people have continued to say okay, well, rates are going to hit the floor, they're going to stay there. They've been saying that since the spike last year, but they've just they just keep finding a reason to stay elevated.
Yeah.
There's always something. If I can communicate what the bear case is more or less, the bear case is that there's going to be this extended period of low rates due to demand destruction and destocking, and a lot of these ships, their fleets are going to be idle, and when they're not idle, they're going to be running below break even. The rates are going to be terrible. The NAVs of these companies are going to get revised down. The valuations are going to be even more ridiculous. Wait, because you might be able to buy them for half as much. And that could be true, but I just feel that you can't discount 9 months of extreme cash flows when valuations were already low. Right. I mean, if you look at the amount of cash that Euronav just generated, let me just open up their report real quick. In the first quarter of 2020, Euronav had a profit of $225 million. Their market cap is $2 billion.
Right.
It's silly.
Yeah, that's right.
Their entire debt load, Euronav's, I believe, is 1.7 billion. Does that? It's even lower than that now because they paid some off. So yeah, their current total debt load is about 1.6 billion. They've got a billion in current liquidity. Right. I mean, it's ridiculous. I don't understand how a company like Wayfair or Uber can burn so much money on a quarterly basis, and you can't even really give it a valuation because there's negative equity value, right? I mean, the value of their assets is lower than there are no positive cash flows. How can you value that business?
Well,
So,
you value it at 5 times hope, 10 times hope, whatever hope, whatever times hope you want.
right. So I think that we're in this age of kind of monetary craziness, where the more money something loses, the higher you should the more you should pay for it, and the more money that it makes, the more you should discount it. It's bizarre.
Yeah. See, with the shipping, when the it's amazing because when the rates were low, people didn't want to buy it because the rates were too low. When the rates were high, they didn't want to buy it because the rates were gonna be low. It's like, is there ever a time when it's a good time to buy these shipping companies?
I cannot answer that. Um, but for me, I did not find anything with uh, greater cash flow potential relative to the price being asked. Um, especially with some of the dynamics that are going on. After the SARS epidemic in 2003, that was in the middle of the last tanker super cycle, and I know that the COVID-19 has been far worse, and I've been following COVID-19 since mid-January. Okay, I was trying to figure out why my tanker shares were selling off in mid-January, and then I read this Goldman report about this flu in Wuhan that was, going to take jet fuel demand down and could turn into a pandemic. I think this was like January 16th, something like that. Okay. Back then, they were estimating a 400,000 barrel hit in global oil demand. Okay. And because of this 400,000 barrel hit, basically oil stocks, oil tankers, et cetera, it was like, oh, everybody panic, everybody get out now. Nobody predicted that this market that these dynamics were going to benefit oil tankers, because nobody had ever seen this kind of situation before, where there was so much demand destruction in such a short amount of time, and inventories are building, so rapidly. I saw some numbers just today that floating storage inventories are up to like 450 million barrels. That's a lot of VLCCs. Um, so
You made
if
a,
to
yeah.
backtrack for a minute and get back to the bear case, there's this idea that there's going to be this extended destocking period, and rates are going to be low, and these guys are all going to revalue even lower than they're already valued, and then oil's going to die, so you should get out. You should get out now. Um, but I just think you can't discount the cash flows, and you can't discount the potential for future disruptions that are going to spike earnings again.
Right. You made a
That's what
very
happens. Yeah, sorry, go ahead.
you made a very good point in your interview on Seeking Alpha, that you said something in the order of, even if demand is, let's say, at 80%, but the tanker fleet is just 5% or whatever it is tighter, then you're going to have rates that are high.
Yeah, if 25% of the fleet is on floating storage, okay, and tanker demand is essentially oil supply, right? It's not oil, like oil demand is not tanker demand, okay? Oil demand is consumption. That's the refineries, right? That's
Mm-hmm.
the end user, gas stations, guy filling up his pickup truck. But tanker demand is a function of exports. So if there are greater exports, there's going to be greater tanker demand. Okay. Now, something really interesting recently, you saw a Cushing draw, okay, but U.S. exports spiked. Okay, so exports spiked, oil went into the SPR, but Cushing drew. Now, think about Saudi Arabia, think about Russia, think about Brazil. If you look at a traffic graph right now for Riyadh or St. Petersburg or Rio de Janeiro, you'll see that people aren't driving. And these are all countries that they have oil refineries. They refine their own fuel from their own oil for consumption in their own country. Well, right now they don't need that fuel, and they're not consuming that oil. So even with Saudi Arabia, I think they're saying now they're going to cut a total of 3.5 million barrels. That's not really that's not really that doesn't tell you how much they're going to export, right? If they've lost 2 million barrels in demand, okay, Saudi Arabia consumes about 300,000 barrels for electricity, and then they drive more than most of the world does. They're one of the world's largest consumers of oil, 3 million barrels a day. So if they're not refining domestically, and if all of their neighbors are also shut down, so they can't sell fuel, in their region, well, they're going to export it, right? They're going to put it on a tanker. So, part of the reason LR2 rates spiked was because at one point, you could not find a single available product tanker in the entire Middle East. So the tanker demand is a function of exports, not a function of oil demand. Oil exports could be higher even if production is lower because there's less domestic demand.
Yeah.
And these economies are dependent on oil revenue. So they're still going to want to maximize the revenue that their state pulls in. And they're going to want to jawbone about cuts, and they're going to want to do that sort of thing. But at the end of the day, their society functioning relies on oil revenue. So even if they cut, you might still see exports pick up.
Yeah, that's a very interesting dynamic, and that's why I think there's so many different variables and levers. That's why it's so difficult for anyone, any analyst, CEO, bull or bear, to pinpoint exactly what's going to happen. And I think that the best thing an investor can do is, to buy these stocks under NAV when they're cheap, instead of trying to pinpoint exactly what's going to happen within the next month or 2 months or even
Right.
6 months.
Yeah, exactly. People are trading the news flow. On my personal investment performance, January was terrible for me. Okay, like January was a disaster. I was levered up. I was super margined, and I was watching this IMO 2020 stuff, and I'm like, you've got all this incremental demand from extra distillate production for compliant fuels, and you've got all this ton mile growth, and then all of that changed in literally days, right? So the outlook totally changed. I lost a bunch of money in January, and essentially made it all back in March. I was one of the first guys that was saying there's going to be a contango, and these countries are not going to stop exporting oil because they need the revenue. So, I kind of saw the situation differently than I think a lot of other people did. And that analysis turned out to be correct. Now, whether or not my future analysis is correct, I have no idea, right? It's just my opinion. And it's not like I've been in this industry for decades. I've studied it basically obsessively for the past 9 months. But, I'm not a fortune teller. I don't know what's going to happen. I'm just thinking about, the incentives of the different players. And one other thing I want to bring up that Bugby mentioned to me when I spoke to him is, the entire global shipping fleet, they haven't been able to dry dock for months, okay, because of COVID-19, right? They can't go and do maintenance on their ship because they can't go into the ports and have people come onto the ships and have people leave the ships. It's too much of a risk, right? So they basically have all been putting off dry docking. So when this starts to abate, you're going to see ships going in for dry docking, and that could create another rate spike in any vessel class. It could be dry bulk, okay? But you're going to see everybody rush to go dry dock their ships. That's another factor he was bringing up, and that's something that I never thought about. I've never heard anybody else mention it until he mentioned it. I've never heard an analyst bring it up. I talk with people who are in the shipping industry, and people that work on ships. I've never heard any of them mention it, right? So I think that there's always some dynamic that can come out in shipping that nobody expected, positive and negative. This is a very uncertain industry where absolutely anything can happen, and just the smallest adjustment, a hurricane in the U.S. Gulf, okay, a typhoon in Japan, any of this stuff can create huge variations in outcomes for shipping companies.
Yeah, that's right. And when I read this book, some of you recommended The Shipping Man, it really drove the point home to me how quickly things change in shipping. So
Yeah,
if you're sitting on these positions and you're like, oh my God, things are just so bad, just in 2 days your mood can completely flip around, and
yeah,
yeah,
yeah. And 2 days later, like let me bring up another positive tail risk. Okay, the U.S.-China trade deal. So the U.S. wants to export its oil, right? Because we're not consuming it domestically. Los Angeles just went into another lockdown. We've lost essentially all of our jet fuel demand. The United States is the largest consumer of jet fuel in the world. Okay, we had been, refining all this jet fuel for domestic use. All of that's gone away. So, the U.S. is not consuming as much oil, but it wants to produce its oil. You've actually, you've got the government opening up the SPR. They're actually, in some cases, I think, buying oil. And so they're trying to keep domestic oil production alive. For domestic oil production to stay alive, there has to be demand somewhere, right? So they're gonna, if they're gonna whether it's refined products or whether it's crude oil, they need to export to survive. And you actually for 2 straight weeks, you've seen U.S. oil and product exports actually increase, which is something Bugbee brought up on the Scorpio Q1 call or Q4 call. When this was first starting to happen, he was saying, well, yeah, this is bad. It could, the COVID-19 thing is bad. We don't really know what's going to happen. But I'll tell you that, our product tanker rates are up because we're seeing a bunch of fuel exports out of China that we never see. So if domestic demand is destroyed, to survive, the suppliers are going to need to export. So back to U.S.-China trade deal. If if China is actually going to honor their end of the trade deal, which a lot of people think they won't, but the U.S. of course is trying to pressure them to honor their terms. Part of that was purchasing a lot of U.S. crude oil, right? So if that doesn't happen, part of the reason that the U.S. agreed to the trade deal in the first place was to open things up with China and sell more oil. And if you remember, the first big spike in tanker rates was last year in October when sanctions were announced on Costco. Okay, so when that happened, rates spiked overnight and they stayed pretty high for weeks. Okay, like Q4 was a great quarter for a lot of tanker companies, and it had a lot to do with the Costco spike. And back then, people were saying, "Oh, this is just temporary." In January, tanker earnings are going to be shit. Okay, well, if China does not agree to their end of the trade deal, guess what's going to happen? Costco sanctions. There's going to be freaking sanctions again if China does not agree to their end of the trade deal. And there could be a hot war. You have no idea what's going to happen, right? I mean, the world is extremely unstable right now. But if Costco sanctions were levied again, with the tanker fleet already pretty tight, and so many vessels being taken off for storage, you could see another crazy rate spike. I mean, these things can happen at literally any point. Okay, and you got the negative tail risks too. Like some country could say, well, like look, we're going to cut our oil exports entirely. Norway could say, Equinor is going to shut down, right? I don't know. I don't know what the probability of these events are, but I'm saying that there are both good things and bad things that can happen that will either spike rates or reduce rates. So I think the probability right now is more skewed to the positive tail event, tail risk, items for tankers than it is to the negative, because ships are getting taken off on storage, because oil exporters, have an incentive to continue exporting oil and refined products, even if they're not consuming them domestically, because the fleet supply is tight, right? So
Right.
anything can happen.
I saw this article. I mean, the last 3 weeks, we've been hearing a lot about how the U.S. shale is cutting production, blah 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 blah, and then all of a sudden, Saudis say that they're going to increase their cuts. Oil goes up, and then we hear that some of the oil production is coming back. I was
Right.
like, oh
Yeah.
my God.
Okay. If an oil producer can produce oil profitably because of the price, then they're going to produce, right? So
Right.
the funny thing is, this manipulation of oil that's keeping prices artificially high, even though there isn't demand. Whether it's countries purchasing for their SPRs to support their domestic producers, or it's speculators trading futures, even though they would never take physical delivery of the oil. That is going to keep, if an oil producer sees the chance to sell oil profitably, then they've got an incentive to produce. I mean, you had people that shut down in May or April that are already talking about being operational again in early June. So the amount of oil that's going to get produced is a function of the price that they think they can sell it at. And as so when I see all these people that are trading, tankers against contango, right, against the front month futures, they sell tankers if oil goes up and they buy tankers if oil goes down. It's kind of stupid because if oil went negative for a while, or even if it was just too low for a while, people are going to stop producing. You want oil for if you're thinking about tanker prospects, you want oil to be in that 30 to 50 barrel, 30 to
Right.
50
Right.
barrel range.
Exactly. Because
You
then they're going
want
to overproduce.
Yeah,
Yeah.
exactly. You
Yeah.
don't want oil to be at $10 or $15 or even $20, because most producers don't have an incentive to produce at that price. So
Right.
when I see people, when I see these charts where there's an inverse correlation between tankers and contango, the lower the oil price goes, the higher the tanker price goes. It's stupid. Okay, like there's some dumbass hedge fund manager out there that doesn't know anything about the business told his programmer, hey, make me an algorithm that does this. Okay. And people have this assumption. I also talked to Bugby about this. People have this assumption that that big money means smart money. Okay. And I don't think that's the case. I think there's a lot of big money out there that's dumb as a bag of rocks. Okay. I mean, I don't know how they got the money, but it wasn't from being smart. Okay.
I
Maybe
I
it
I
was lucky,
hate it.
maybe it was inherited, maybe it was grifted. Okay. But there is a lot of big money that's dumber than 50% of retail traders, especially I think 50% of retail traders that are looking at this kind of sector. I mean, when I talk to people that are investing in tankers, I mean, this is like something really specific. So they kind of fall into two camps. They either like invested because they saw this article about tanker rates going crazy and share prices are going to 10x and they wanted to get rich tomorrow, or they act, they do something technical. I don't know what you do, but I've seen a lot of programmers, a lot of engineers, a lot of doctors, physicists, like smart people who like technical things, who were attracted to this sector because of its valuation and its complexity. And I think that in general, a lot of these guys are a lot smarter than some of the people that are running big funds.
Yeah. I hate it when people tell me, "Oh, if this is what the stock price is doing, therefore the smart money have figured it out." It's like, no. I mean, anyone I talk to, they don't understand this sector very well at all.
Right. Yeah. So I mean, if you look at the things that smart money is doing, I mean, if smart money is big money, I mean, they're buying bonds at negative yield, right?
Right,
Like,
right.
because they think the price is going to go up. I mean, what kind of upside down world do we live in when somebody would buy a bond at negative yield because they think the price is going to go up?
Right.
That
Totally agree.
that's not, and whether or not the price will go up, whether or not they're correct in that assumption is irrelevant, because it's like when those conditions occur, that means that your financial system, your macroeconomic system, has become so irrational that the conditions that allow that to be true can't possibly persist, right? You can't you can't have an irrational economic system where bond yields can go negative and the price of bonds just keeps rising forever. That can't persist forever. It's impossible. If that condition persisted forever, there would be other things going on that would not allow the economy to function. You can't have negative yields forever. That
Yeah.
that can't continue.
Yeah, that's right. All right, Calvin, we can talk about this for hours and hours, but I don't. Let's wrap it up. I don't have any more questions. Do you have any ending remarks do you want to leave people with before we go?
Um, I guess just that, just kind of risk management. Um, Markets right now are crazily irrational, and they could remain that way. Not forever, but long enough for them to lose all their money, right? So I've got some really risky positions. Um, I am aware of the risks that I'm taking, and I am aware that it could all blow up in my face. Okay. And if my account value was 50% lower than it is tomorrow than it is today, obviously that would suck. Okay. But, I'm not going to go jump off a bridge. Okay. And I just want to, remind people that are listening that you need to be aware that the global economic situation is extremely unstable, and anything can happen. You read the stories about guys, trying to get cute, buying WTI for a penny, and then the value of WTI went negative, and they got a message from their broker saying that they owed millions of dollars. These are very exceptional times, and very exceptional things can happen, both positive and negative. So if you have a family that you're supporting, if you have money saved for a specific goal, if you are renting, if you do not have your living expenses covered, you have no business taking the kinds of risks that I'm taking, or that some other people are taking. I mean, it's kind of crazy that I'm taking the risks that I'm taking. But if your survival or the survival of your dependents is at risk, you should not be taking big risks, especially in extremely volatile sectors, right? So make sure that you've got food in the freezer. You've got beans and rice. You've got some cash available. You're basically confident in your situation for the next 6 to 12 months, if not longer, because the world is destabilizing very rapidly. And if you look back in history, there have we've lived in a relatively very positive situation for a very long time now. But most of history, life has been far harder, and life can become very hard again. there are, so if taking financial risks now is going to, harm your survival chances later, don't do it.
I am so glad you're bringing it up. A couple of days ago, I got this email from this guy, pretty much kind of nicely blaming me that, oh, you recommended this stock and I invested a lot in it and you set me back years. And it just made me so upset, so guilty that within seconds I literally got a back spasm. So listen to what Calvin is saying, be responsible and don't be stupid with your money. I mean, just because we are recommending something doesn't mean it's not going to go down, doesn't mean you should go on margin. Just be responsible. We're just providing you with an idea, and it's your job to do the proper due diligence. We're not going to, we're not um, gods. We're just average guys that are trying to make money for ourselves, and that's all we're trying to do. So, Calvin, thank you very much for doing this interview. I really appreciate this.